Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. All right, ladies and gentlemen, in this video, we're going to go ahead and talk about some things that we posted online. But before we do that, I want to mention something because I want there to be no confusion. And you can only do so much. And sometimes people hear it, sometimes people don't. But so when you go ahead and you just post something online, you're going to get a lot of people, right? You're going to get some people that get it, some people that don't. And unfortunately, even if you by any chance try to explain something, sometimes, unfortunately, things don't get interpreted the right way. And again, we are an educational platform, so it would behoove me not to acknowledge this. So we're going to go ahead and do that real quick, right? What's going on, B-Rad Cooley? What's going on, Indian Band Who? Right? What's going on? What's going on? All right. So the issue here is, unfortunately, retail investors, and honestly, everybody in the general population, we all, even myself, hold on for a sec, hold on. Even myself, unfortunately, we get stuck into this thing called the matrix. And sometimes we get into these nitpicky arguments that unfortunately don't add value. And it gets to a point where they become actually wrong and they get propagated. So what we're going to do is we're going to go ahead and acknowledge this, okay? So this is the graph I went ahead and created. And this graph is very insightful. If you understand this graph, then you understand the overall picture of where where Clover Health could go, right? So with this, oh, by the way, we talked about kind of after December 18, there's a higher probability we're going to get some form of a Santa Claus rally. It seems as this is playing out now. It's about 5.45, or now it's 5.56%. Maybe I'm wrong here. Yeah, so something like that, right? Allah's rich dad teaching all the poor dads rise up. Absolutely, and it's not about being rich or poor. We got this. You could do it, right? So here's the thing. I just wanted to just point this out because it's very important, right? So yeah, so we got our we're getting our Santa Claus rally. Granted, Palantir got its Santa Claus rally on Friday, so now we're just kind of catching up. But here's the post that I was referencing. I posted it on Reddit, and I got about 108 likes. That's awesome. I appreciate you guys. Neither grade. You went ahead and made a comment. And again, I'm not mad at you. I'm not, you keep saying like, I did not mean it in a negative way. I'm having a conversation with you. I'm not mad, right? Maybe sometimes my tone can come off as I'm upset, but I'm just, I'm like a robot. You know what I mean? Like, I just like kind of like tell you how it is, right? I'm not mad. I'm just, my point is just showing. I'm just trying to share what's in my head. That's all I'm trying to do here, guys. Right? So, okay, let me just kind of go over this because we got some people that like this, and it could, this is wrong. Okay, so I want to set the record straight. Okay, so first, to set the record straight, we have to go over this graph. Okay, so please listen. Okay, please listen. This is very important, man. Like, this is important. If you guys want to understand the market, this is very important, right? All right. So this is Humana's free cash flow. This is not Clover's free cash flow, okay? The y-axis is in millions. So that's 250 million. That's 500 million. That's 1,000 millions, which is AKA 1 billion. This is 1.25 billion. This is 2 billion, 3 billion, etc. This is the x-axis. This is the y-axis. This is the x-axis. This x-axis is 1991 to 2024 pending. Now, you've seen the free cash flow of Humana has gone up a lot, but unfortunately, in recent times, it's gone down to negative. Now, have they been tested? Approximately every 10 years, they get tested, but this test is quite different. In fact, Cigna and Centene, a lot of them are basically getting hurt. So what I'm basically trying to point, so now we understand kind of this. Now let's go here, okay? So I said here, Humana's free cash flow in 1991 was 107 million. At the time, it was trading at $30 per share. with a market capitalization of $3.61 billion. In contrast, Clover Health now has a free cash flow of $118 million. For the first 3 quarters, not a full year, right? And it's currently trading at $3.19 per share with a market capitalization of $1.6 billion. Listen, guys, who cares about the share count? $30 per share versus $3 per share. That doesn't tell you anything. What tells you something is the market cap. So forget the share count, because that doesn't give you the price of the share, doesn't give you the data. It's about the market cap. Okay. All right, listen. So now you kind of understand what's going on here. Now let's look at what this guy's argument is. He said, I hate to be the party pooper. I'm invested in CLOV myself, but these numbers don't match. Okay. 110 million in 1991 equals approximately 254 million adjusted for inflation today. We don't even have half of that. Okay. So let's go ahead and dissect this statement. So in 1991, we have I don't know why he's using 110. It's 107, but let's just use his number, 110. Okay. And let's calculate it. It's 257. Okay. You said 254. It's okay. You're ballpark. Okay. And he said that we don't even have half of that. Okay. So you take 254. Okay. And you divide by 2, you get 127. Okay. This is Clover's 118 million for the first 3 quarters. We haven't even had the 4th quarter yet, right? Now, if you were to take Q1, which is 25 million plus 44 plus 49, Q2 and Q3, divide that by 3, multiply it by 4. Next year, around that, if we didn't have the ACO payment, we would have 157, which is more than half. Okay, so your statement here is actually wrong. Okay, all right, but it's okay. It's ballpark. It's near the target. Okay, I'm not a stickler for that. This is where you get wrong. So 3.61 billion in 1991 is approximately 8.3. Okay, so this, I don't understand. Why would you do this calculation? Because it doesn't make sense. Why are you calculating the overall market cap of Humana in today's present value? Right? That doesn't make sense because that doesn't give you anything. So you're saying that CLOV is about 1/3 of that. So I see what you're saying in regards to free cash flow in terms of how it's translatable, but that is not the point here. Okay. And I'll explain to you what that is, right? So I love how the CLOV community is always positive and really believes in the stock, but please let us not overhype it by comparing it to other stocks. Yes, there's a lot of upward potential, but if we make that potential bigger than it is, then people will get disappointed. It's not a get rich scheme or, get rich quick. So he has an issue with comparing this to other stocks. Okay. I'm going to acknowledge this, right? So anywho, so I said this, and I'm trying to, if you calculate and put 1.6 billion in market cap in 1991, then you'll see what you'll find in 3.75. So let me explain. Okay. So if Clover back in 1991, because I said here, Clover is 1.6 billion, right? Today, since it's up, it's actually 1.69 billion. Okay. But we'll just use yesterday's number, 1.6 billion. If we put 1.6 billion here, and if we were to look at the inflation, you get 3.75 billion. Okay. So if you reverse the inflation rate, Clover at 1.6 billion is equivalent to 3.75 billion. So that explains why the market cap of Humana is 3.61 billion, near the 3.75 billion. You understand what I'm trying to say? So let's reverse it backwards, okay? So let's look at the rate. Let's calculate the rate of inflation based off of these two metrics. You take 3.75 and you divide it by 1.6. You do that and you get 2.34. So you would have to divide by 2.34, right? So if we take the free cash flow of Clover and you say 118 million, divide by this, the free cash flow of Clover, if you reverse the free cash flow back to 1991. So right now, Clover has 118 million. Okay. If we divide by the ratio of 2.34, you get 50 million of free cash flow. Okay. So if Clover goes back to 1991, it won't have $118 million. It would actually be worth $50 million because back in the day, $50 million is pretty much the price of what $118 million is now. And I know that might be depressing for you, but you look at the graph of Big Macs, you could see the inflation, what happened. Okay. So that shouldn't surprise you, right? But it's 50 million. Okay. So 118 million is worth 50 million. Okay. So Humana has around 107 million of free cash flow back in 1991. So you're telling me that Clover's free cash flow back in 1991 would be worth how much? 50 million. So, okay. So it's cut in half. All right. So if it's cut in half, then what was the market cap of Humana back in 1991? It was 3.61 billion. And since we have on average the same free cash flow as Humana in 2024, what's the market cap of Clover right now? 1.6. So now let's take 3.61 divided by 1.6. 3.61 divided by 1.6. 2.25. Okay? 2.25. Now, what was the ratio calculation when we calculated the inflation? 2.34. You see how 2.34 and 2.25 are the same? So I don't understand what this guy's saying, but your math is wrong. And you're saying, I don't get it, right? So, I don't get it, right? So your message saying that Clover's undervalued is one I completely support, but we already know that, knew that, or else we would not have invested. That's not correct because people invest in companies and don't even know the value of something. So that's a generalized comment, and that's based off of your point of reference. Other people invest in Clover, they don't understand valuation, right? They have an idea, but a lot of people invested it because of the squeeze, right? All right, so, but comparing to it to others does not help since we are not the same. What does it mean when you're saying since we are not the same? Humana, so you're saying Humana is not the same as Clover Health? Habibi, Humana takes care of Medicare Advantage. It's a Medicare Advantage. Clover Health is Medicare Advantage. So you're telling me they're not the same? And especially when you adjust for inflation. Actually, we just adjusted for inflation, and I did the CPI calculation here in front of you, right? From the Bureau of Labor Statistics, and we found the same ratio. $118 million now is equivalent to $50 million in 1991, which is equivalent to half of the 107 million, which is equivalent to half of the 107 million that Humana had back in 1991, which is why the market cap of Clover is actually half of that of Humana. Please tell me, for the people listening on YouTube and Twitter and beyond, please tell me you understand this, right? Because this is a very central, important concept. And this guy I don't know what math he's calculating, but this math is wrong, right? And I've been doing this for over 10 years, okay? And again, you get so nitpicky in this, you lose the overall concept. All right. I try to explain it to him, and I try to say that's what we use the 2 to 3% perpetuity model with our intrinsic value calculation, right? That's in terms of our proprietary discount rates that we have, right? So I try to explain, and then I say, again, right? So this is security analysis, but I'm not a financial advisor, yada yada, right? So, then he says, I see where you're coming from, and I'd like to clarify my perspective in a more relatable way. First off, I want to emphasize that I'm not disagreeing with the idea that Clover is undervalued. Okay, we agree that's agreeable. However, my concern arises when historical comparisons like matching money from 1991 to 2024 are made without accounting for significant changes over the past 30 years. Okay, the market already accounted for those changes. Humana back in 1991 has the same free cash flow as it did in Clover's 2024. But look at the market cap. The market cap is not the same. Humana's market cap is double of Clover's, because if you were to adjust the inflation rate between 1991 and now, you would have to cut whatever dollar Clover makes now, you have to cut it by 50%, which is mathematically makes sense. So, factors like inflation, market events, and evolving regulation can't be overlooked. Simply equating $1 in 1991 to $1 disregards these critical variables and shifts the focus away from proper security analysis. Okay, so your statement is and I downvoted this because this is incorrect. I'm not comparing $1 from 1991 to $1 in 2024. This is incorrect. How am I doing that when the market caps are different? $100 million in Humana and $100 million in Clover gives you $3.61 million for Humana and $1.6 million for Clover. How is this a 1-to-1 ratio? This ratio is cut in half, which is what you would do if you were to calculate the ratio. If you take 1.6 to 3.6, this is this. So watch. Let me redo this calculation. 1.6 is 3.75. Doesn't that kind of make sense here? Right? So anywho, again, this guy's math is not correct, right? And then I think I tried to explain it to him. The thing is, that's not what the post is showing. In 1991, 100 million of free cash flow got you approximately 3 billion of market cap versus now in today's money, it's only getting you 1.6 market cap. You see how it's been cut in half. And unfortunately, the gentleman doesn't respond. Okay. Now, here's the issue. I don't know if this guy's trolling or not. But I've taken it seriously because I want to make sure that people understand the mathematical comparison here, right? And people do understand, because this gentleman here said inflation adjusted. Clove's current valuation is right about where Humana's was in 1991. It's amazing how efficient the market is. Exactly. Because the market already adjusted the inflation rate, and it's beautiful, right? It is beautiful, right? Because here's the thing, and this is why this guy's statement is wrong. If I am equating $1 is equal to $1, then how on earth is the market cap of Humana in 1991 with approximately $100 million in free cash flow bigger than Clover's $1.6 billion in market cap with $118 million in free cash flow? Why is Clover smaller, right? By literally half more, right? The reason why it's smaller, it's simple. The reason why it's smaller by more than half is because it is inflation adjusted. And how can you check if it's inflation adjusted? You reverse it. Take 1.6 and from 1991 and adjust it to this, you get 3.75, which comes out to be close to 3.61 billion. Anywho, so this argument is silly. It doesn't really add value, but the problem is, this is what happens. You get into this nitpicky argument, but you're stuck into the matrix. What is the overall big picture of this, right? There's a big picture here, okay? And we got stuck with this math here, but then obviously I just broke it down to you, and I had to break it down to you in spoonful chunks, which is unfortunate, which I'm not going to have time to do this in the future. I mean, it's either you get it or you don't. You don't, it's fine, right? And that's the edge. That's the alpha, right? That's the edge that you guys are going to have when someone invests in Clover and people sell. There's going to be people that sell at $10, $15, and because they don't know the value of it, right? They're going to sell $5 above SPAC value, which for a company that's disrupting the healthcare space. In any case, please let me know if this makes sense, because it may seem as we are relating Clover, by the free cash flow to free cash flow. But unfortunately, what people don't understand is they don't understand what a share is. People don't understand what outstanding shares is. People don't understand what market cap is, right? JB in our Lifetime Access group, he had a hard time understanding that in the past. He had a hard time doing that, right? But now he gets it. And the problem is there's vocabulary in the stock market. It's almost like gatekeepers, right? And if you don't understand the vocabulary, then you're destined to lose your money in the market, because this is the mechanics and the engineering of how stocks work. But unfortunately, people don't get that. And when I see a comment like this, I see that there's deficiencies in this. Again, I've been doing this for over 10 years. There's deficiencies in this guy's understanding of the market. I don't know why he's calculating 3.6 to 8.3, but you can reverse it. Take 8 point, let's do his math. 8.3 divided by 3.6. What do you get? 2.30. Okay. You get 2.30. Okay. So now take 2.30. Take 3.6 divided by 2.3. You get 1.56, which is next to the market cap of Clover. So your math, again, you can't help it. You can't help everybody. I try to explain, but you stop talking. So, I try my best, right? But it is what it is. What can you do? Okay. But anyway, so that's that. So I just wanted to I really wanted to break this down to first principles, because this is important. So now let's talk about the true meaning of the graph, as I am the creator of the graph, right? All right. So now we got an update here from James. CLOV is up 6.11%. I'm actually going to be releasing my options move on the stock terminal here. I'm just waiting for it to get executed. Oh, this is sexy. This is really good, guys. Oh, yeah. Al's the economist teacher we should have had in high school. No, it's unfortunate because, it's really sad, man. It's really sad they don't teach this stuff, really, because the problem is, and this is why I like medical school. Medical school teaches you what the difference between what you know and don't know. Because imagine being so confident in your analysis. You're being so confident in your analysis that you don't even know you're wrong. I mean, holy shit. But again, isn't that the edge? Imagine all the people that invested in AMC. They were screaming and banging on the table. We are right. We are right. And I was talking about dilution. And they get diluted to oblivion, right? And they didn't even have, I said dilution and they didn't believe it. And now the stock is down 98.43%. I mean, any more than it could be considered a hand sanitizer, killing 99.9% of retail bacteria, right? Jesus Christ, right? So anywho, again, the reason why I spent some time on this, because I want to make sure that it's clear, okay? And I play around with the math. It's really cool to see the market adjust for this. Okay. And like I told you, listen, like I told you, Clover is responsive now. It is a responsive stock. Okay. That means it is fundamentally responsive to the intrinsic value calculation, which means that as it performs and increases free cash flow, we are going to see it. Okay. So now let's go ahead and explain what that means. Okay. So let's look at the price target consensus of Clover right now. Look, guys, look at the price targets, man. They're high of 6. The average is around 4. Guys, it is fundamentally sounding. Again, guys, this is part of our data from the stock terminal. If you guys want access, take advantage of the new year. It will be expiring soon. I think we got a couple days. Because I didn't get an email yet. Take advantage, lifetime access, right? Okay. And also there's perks that come with this, right? You get exclusive. You're gonna end up seeing exclusive invites. You guys, I'm gonna show you. I'm gonna show you guys some really cool stuff, right? So there's a lot of perks to this. I just kind of just inject it like a stuffed turkey, just push a bunch of value in this, right? Okay. So mm, let's let's go ahead. Let's go ahead and see this here, okay? They do teach, but nobody pays attention. Kids want to play football. Yeah. Well, that's the problem, though. The economics. I've never met an economist that's rich. If I roll up in a Lambo and I roll up with some cool stuff, I'm sure they'll listen. Don't you think? Brain surgeons need to be right 99.9% of the time. I know, and I get it. It's I could have easily let this go, but the problem is that this is this will be bad because there's it's wrong. It's just not, the math is wrong, right? And it's, since I'm the OP, I'm the original poster. I'm like, you know what? I'm gonna have to set it straight, right? So again, and I hope I did it in a respectful way. Again, listen, man, I wasn't born with this information. I had to learn this information. It took me over a decade to figure this stuff out, guys, right? Listen, man, it's okay. Okay. I'm not mad or anything like that. In fact, I think this is a good and honest mistake. Okay. Because you're just looking at free cash flow. You're not even looking at market cap. It's like, what the hell, right? So, all right. I took economics in high school, got an A. This was not taught. Yeah, exactly. They don't teach this. Trust me. They don't teach. You go to college and they don't teach this. Trust me. Okay. All right. Listen. So now that we got the free cash flow and figured this out, this is essentially where Clover is right now. Obviously, you can divide it by 2. It would be at 50. But again, the market is already adjusting this, right? So now this is the point of the graph. Screw the 1-to-1. Screw this, okay? Focus on the bigger picture, right? Warren Buffett said 8 plus 8 does not have to equal 16. If you figure out that the stock price is $3, but it's worth $14, it doesn't matter if 8 plus 8 is 14. It's okay because you bought it at 3. You bought it at 60 cents. Doesn't matter. You're going to make money. All right. So listen. So now let's talk. And that's the problem. This is where school fails experience, right? This is why experience matters over school. Book smarts. That's why a lot of people, academicians, they don't make this kind of money. The only one was Jim Simmons, but he had experience before doing the academics. All right, listen. Okay. So now that we see this, when Humana was doing their business in 1990s, nobody knew how big the healthcare system would be. Nobody knew that. Right? So they had to pave the path. They had to create the industry of Medicare Advantage and insurance and private insurance. The thing with Clover Health is that, ladies and gentlemen, is that we know the potential of the growth of Clover. You don't believe me? Let me go on YouTube. Let me go here. And let's type in, I don't know how to spell his name. Sometimes I mess it up. Chamath Palihapitiya, Clover Health. Clover Health CNBC. Okay. Let's I'm not trying to watch the video here. I'm just trying to show you something. Okay, that's not the right video. Hold on, guys. There it is. I found it. Okay. So this gentleman here is saying you can't compare something about its own something about its own journey, or I don't know what the hell he's talking about. Did he delete that? I think he deleted it or something. Let me see. Hold on. Oh, here it is. Yeah. So don't compare them. We are making our own story. What the hell are you talking about? What story are you talking about? Right? Like, so like, and I tried to explain it to him in this nice post here. I said, are you telling me that, oh man, this is so funny. So you're telling me that like, if somebody, if an adjuster comes to adjust the property of the house to determine its value, you're telling me the adjuster is not going to compare the other houses? Don't compare them. We are making our own story. Bro, what kind of analysis is this? Is this like an artistic analysis? What the hell is this? I don't understand. Because listen, what the hell is Trumov doing here? He's comparing Humana, he's comparing Centene, he's comparing United Healthcare. Listen, guys, this how you do the comparison, right? So the fact that we know where to go, the fact that we know now the potential of what Humana has done, what Centene has done, Clover now is essentially, we know the path of where they can go. The market is already there. Okay. Now that we know the market is already there, the second thing is Clover is growing fast with its free cash flow, and they're growing at an accelerated rate. Okay. And hold on. So they're growing at an accelerated rate. Sorry, guys. So they're growing at an accelerated rate. All right. Which means that because the market's already there, Humana is pulling out of these states, and it's causing disruption because now, for the first time in Clover's journey, they're not getting new people that turn 65. They're getting converters. They're getting switchers. Okay. And they're taking the market. So they're going to be accelerating faster than what Humana did because they had to basically create the market. Clover's taking the market. Okay, so that's those two things. One is Humana and all the other insurance companies, they built the industry. Okay. The sad part is they're burning cash in all this, right? In terms of they're not able to handle the costs, right? Manage costs, but Clover is with the medical cost ratio. But I digress. So they led the industry. But the problem is now Clover is taking it faster than how they initially got it. So what I'm basically trying to tell you is that what Humana accomplished in, 2024 minus 1991? What Humana has accomplished in the last 33 years, I think Clover is going to do it in the next 5 to 10 years. Okay? That's the point of the graph. Okay, because look at all the free cash flow. Look at all that going down. Okay, look at Humana. Listen, look at Humana stock. We did this analogy here. Humana's down 45%. Okay, Humana's down 45%. It used to be a 50, 60, it used to be a $60 billion business. Humana used to be a $60 business. It lost $30 freaking billion. I made this post 6 months ago on Andrew Toy's freaking wall. All right. Look at CVS. Okay. CVS is down 44%. CVS used to be like $70, $80 billion business. No, it used to be like $95 billion business. So let me ask you a question. Where did all of these billions go? They evaporated. Where did they go? Where the hell did they go? You know where you know where they are right now? You know where these billions went? They're in the cloud now. They're in the cloud. They're waiting. And everybody and their mom is looking at Clover Health. They're looking at Oscar, and they're looking at these new disruptors. Okay. And specifically now they're looking at Clover. Okay. They're looking at Clover. And now especially if you look at the fund score, Clover now is ranked in the top 250 best stocks in the world. And in the United States, Clover is ranked in the top 75 best stocks in the United States. Ladies and gentlemen, do you understand the point that I'm trying to basically get into your effing heads? Do you get what I'm trying to say? I'm like literally screaming in the top of my lungs. I'm not even enjoying my hot coffee right now because I'm trying to show you guys the point of this graph. This graph is so important. Billions of dollars are leaving the incumbents of these Medicare Advantage companies. And they're right now in the cloud. They're awaiting. What did Jim freaking Cramer said? He said, oh, I don't want to hurt my friends, right? Clover's a good company. We are about to see the biggest disruption in healthcare that your eyeballs have ever seen. And your portfolios, just watch. Your phone is going to freaking break. You understand? By how much green it's going to be oozing out of the phone. You understand what I'm saying? You understand what's happening? Like this is huge. This is huge. Okay. I sound like Donald Trump now. This is huge, right? The way he says it, right? Billions of billions. Okay. But listen, guys, and all jokes aside, this is a huge thing. Billions of dollars has left. And if you don't believe me, look, let's go back to this guy. Oh, I just got to post it. Let me see if I can find it. It's market cap. This guy, man, I love this guy. I freaking love you, man. Where the hell are you here? Where is this guy? Man, I love this guy. Let me go repost it. I love this guy. Dude, read this. Read this, okay? Read this too, it's important. But read this. He said it right here, 100x, right? Read this. In 10 years, this is Vivek, the guy who freaking founded Clover. In 10 years, and what did I just say? I said what Humana accomplished in 33 years, Clover is able to do. I think Clover's going to do it in the next 5 to 10 years. And the market's going to reward that. Okay. What did Vivek say? In 10 years, I strongly believe that it is possible for Clover to have made the biggest positive impact in healthcare. Okay. What is the EDIC score? Whatever the thing is. It was 4.9. It was the highest score in the industry. Okay. Now this is the big part for the stock market channel, right? This is good for medicine, right? This is stock market. While simultaneously accruing the largest market value in healthcare. While accruing the largest, AKA the market cap is going to be so juicy. It's going to be so juicy that you don't even know what to do with this money, right? In excess of any healthcare company that exists today. Right? You understand what this means? You I don't know how to freaking tell you this. I don't know. Do I scream in the mic? Do I get it like a little freaking? Do I get like a little Slurpee straw and put it in your ear and scream? Like I don't know how to explain this to you. Okay, and this is why I'm trying to tell you. You got to break out of the matrix. I don't know what the hell this guy's talking about. I don't understand what you're talking about. Freaking, you're going so deep that it's so wrong. You need to look at the big picture, okay? And this is why I said this. I've been doing this for over a decade, and I have never encountered an opportunity this promising in the history of the stock market. It is time for everyday investors to succeed on Wall Street. From the heart of a future physician, let us eradicate the social determinants of health, right? And this is how it all connects in my eyes. Stock market and health and being able to democratize financial literacy. Okay. Right. But here's the thing. I don't have to trust him. I see the numbers, right? I see the numbers. The numbers are panning out. The numbers make sense. Right. And again, time will tell. Right. So to be fair, AMC shareholders were saying fundamentals don't matter during a squeeze. They were 100% right. And I was saying that fundamentals do matter in the long run. And they told me that I was wrong, even in the long run, that this time is different. And I said that they're going to be diluted. And they said that I was wrong. We were never going to be diluted. Right. They can't dilute us. That's what they told me. Right. You can look at the videos. Right. That's unfortunate. Right. All right. So break my phone, Al. Grain of salt, I know, but keep me in your pocket, Al. I'm writing. That's what I'm saying. Listen, guys, we are going. I'm telling you, and this is why. Here's the thing. B Rob said something really nice yesterday. I'm going to share it, B Rob. I'm sorry. I'm going to share it. I like this a lot. B Rob said this. He said, if God is part of this group, we can't fail. Okay. And that's the beautiful part about our group. Okay. Is that we put God first in everything we do. And, we can't fail, right? Because we're doing it from the good part of the heart. And Denzel Washington said, Denzel Washington, go to YouTube, type in Denzel Washington motivational video. He said that anything good from the heart is God's proof set beforehand to indicate that it's yours already, right? So listen, guys, this is why, again, people are sometimes they're like, man, why do you advocate so much for your group? Why? Listen, guys, I'm trying to create one of the largest, most educated value investing group in the world, right? I know that sounds crazy, but I'm telling you, we've stumbled upon a really good company, in my opinion. You guys seen my call outs with Palantir at $6.55. You've seen my call outs with Robinhood. We had the video where you can look it up. You saw my call outs with SoundStock when I said price target $20 and now it's $23.85. You guys can look at my history, right? The group is real. The group is real. You get access of 2.5 billion outputs of institutionally graded data. You get access to people that you can jive with, you can talk to, you can improve. It's all there. And there's nothing in the history of the stock market where you can get lifetime access. Go find me a place that gives you lifetime access to data in a group, right? This is going to become an exclusive membership. This will become a $5,000 to $10,000 group. Again, I don't care about people like, well, how are you going to sell it? Listen, it's expensive. This thing's very expensive. For the folks that came in a year ago, 2 years ago, you were heavily rewarded. And the folks that are coming in now, you're going to be heavily rewarded because in the next 3 years, 5 years, you're going to see the price of this thing. Okay? All right. Awesome. Hell yeah. Okay, so, hey, Al, genuine question. If CLOV crank up on their growth rate, would there be a risk of burning too much cash that we go into negative? Seems, yeah, well, that's the thing. It's a balance. Life is about yin and yang. It's like oxygen, right? Too much oxygen is flammable. Too little, you become hypoxic and you cannot breathe. So there's a balance, and they need to find that equilibrium. And they themselves only know that equilibrium, right? So yeah, they're going to have to do that, right? All right. So there it is, guys. There it is. And again, this is, not financial advice, right? Again, I'm not a financial advisor. I'm not a stockbroker. Take everything I say as a grain of salt. I'm just a guy trying to basically create an educational platform that's being injected with over 2.5 billion outputs of freaking institutionally graded data. And I'm just trying, again, that's what I'm trying to do. Okay. So that's it, guys. Right. That's it. All right. And I get it. Sometimes, it is what it is, but can I say something real quick? Let me just say something. Okay. Let me say something. Okay. So let's say on average, CLOV grows about 25%. Okay. In 10 years, it'll have a market cap of around 12.2 billion. Okay. 12.2 billion here, 11.5 equal that. You get about 1,403 of free cash flow. Now, if you don't believe that a healthcare company can get 1.4 billion in free cash flow, let me break it to you. Let me give it to you. Okay. Let me give it to you good. Okay. Hold on. Let's look at the nearest competitor, Humana. Okay. You're telling me that Clover can't get a free cash flow of 1.4 billion? Look at the free cash flow for Humana. It's freaking 4 billion here. 3 billion. I'm just doing 1.4. Okay. Now, assuming they grow 25%, because I think they're going to dominate the market, and they go for 10, we go 10 years, and we do a 501 share. In 10 years from now, if they can grow 25%, we could see a price anywhere between $96 to $188. Listen, guys, $188 divided by 2, that's a $94 billion market cap. Guys, just the other day, Humana was a $60 billion market cap. Okay? You understand how big this is? You understand how big this is, right? The potential here is huge. This is what Vivek is calculating in his mind. Okay? This is what he's calculating. And Vivek, if you think I'm wrong, go ahead and tell me I'm wrong. Go ahead, right? I called you out, Shamal. You never said anything, right? When I was talking about book value a long time ago, right? I've been doing this for a long time, and all these people, they keep their mouths shut, I mean, he didn't keep his mouth shut, right? He said it right here, right? Good. All right, let's see. That guy who was hating on your Twitter is following Vivek and Andrew Toy. That's so funny. Hell yeah, Al. Needed this video for the drive today. No, yeah. So yeah, I appreciate you. And that's the thing. The biggest thing is, listen, man, I don't understand what you were saying here. I don't get you, man. Your math is not mathing, but you go ahead, you explain. Some people will get it, some people don't. The people that don't, I wish you the best. The goal of Al Stock Trades is to help you break out of the matrix. Okay? That's the goal of our platform, is to get you out of this matrix. It's to get you and help you climb out of hell. Okay? That's the goal of our platform. Okay? That's what we're trying to do here. Okay? You deserve the American dream. Even if you're in Europe, you deserve a taste of what capitalism feels like. Okay? Right? So that's it, right? So that's all I have for you guys. Again, here's the platform. Take advantage. Great video. Hit a thumbs up. CLOV is 6.5% up. It's $3.40. Let's go, baby. Let me check the options here. I'll be releasing it on the stock terminal. Oh, yeah, baby. Ooh, this looks sexy, guys. This looks really sexy. Oh, baby. That looks real good, guys. Listen, guys. We did this together. That's all that matters. We did it together. Okay? We are literally, this is the first time ever in the history of the stock market we have a documentary of over 700 videos documenting the destruction and the falling down of the behemoth Humana and their free cash flow. We are witnessing change right before our eyes. And as we are witnessing this change, we are getting richer every minute, every day. We are getting closer to our dream, right? We're doing this together, okay? I'm going to have to take this here, this little logo here. I'm going to have to spike this up because we're going to have a nice hairdo when we go to Vegas. God bless you guys. Love you a lot. And I'll see you on the next one.